Hey, what's happening? I'm Ross. Looks like inflation's gone up again. Let's get into this article. Fed's preferred gauge shows inflation accelerated even more than expected in August. This is out of CNBC. Jeff Cox, Friday, September 30th. Uh, and the key points are core inflation, which is what the Fed uses to base their policy and decision making on. It's core inflation. I believe that's the CPI with gas and food stripped out of it, if I'm not mistaken. Core inflation rose 4.9% from a year ago in August and 0.6% on a monthly basis, according to a measure the Federal Reserve watches closely. Personal income rose 0.3%, the same as July and in line with the estimate. Spending rose 0.4% after declining 0.2% the month before. Headline inflation, including food and energy, also accelerated despite a sharp drop in gasoline prices. I don't think gasoline's counted in their core inflation. Inflation in August was stronger than expected despite the Federal Reserve's effort to bring down prices, according to data Friday that the central bank follows closely. The personal consumption expenditures price index, excluding food and energy, right? That's they take out food and energy in the metric that they use to base on the interest rates, whether they move interest rates up, keep them the same, or lower them. So the inflation index that the Fed uses does not include food and energy. And that index rose 0.6% for the month after being flat in July. That was faster than the 0.5% Dow Jones estimate and another indication that inflation is broadening. Yeah. So you know what that means? That means the Fed is going to raise rates again. I think the next time that they are up to raise rates or have a meeting is early November and then December. I think on a year-over-year basis, the core PCE increased 4.9%, more than 4.7% estimate, and up from 4.7% the previous month. Including gas and energy, headline PCE increased 0.3% in August compared with a decline of 0.1% in July. It rose even with the sharp decline in gas prices that took the cost at the pump well below the nominal record above $5 a gallon earlier this summer. So just meaning that inflation, the numbers are in, and inflation is worse than it was expected. We knew it was going to be bad, but it's a little bit worse than they thought. I think what did she say? The estimate was 4.7%, and it came in at 4.9%. So 0.2% off on the estimate, worse than what we thought, worse than what they thought. The Fed generally favors core PCE as the broadest indicator of where prices are heading as it adjusts for consumer behavior. In the case of either core or headline, the data Friday from the Commerce Department shows inflation running well above the central bank's 2% long-run target. Yeah, they want to get it to 2%. So according to them, they're going to continue to raise interest rates aggressively until they can get it to 2%. So it's nowhere near. It's like 2x where it needs to be, 2.5x, something like that. Where was that? 4.9%, and they're wanting to get it to 2. They got a while to go. Again, I would envision the next meeting in early November that the Fed will be raising rates, and then there's one December 13th or 14th, I think. They'll be raising rates again then too. So I'm not sure the exact dates, but I know November and December are the next meetings, and I'm sure the Fed will be raising rates. Outside the inflation data, the numbers showed that income and spending continues to grow. Personal incomes rose 0.3% in August, the same as July, and in line with the estimate. Spending rose 0.4% after declining 0.2% the month before, beating the 0.3% expectation. After tax income increased just 0.1% after rising 0.5% in the previous month, while inflation adjusted spending rose 0.1%. The inflation data reflected the shift in spending from goods back to services, which saw respective gains of 0.3% and 0.6% on the month. Food prices rose 0.8%, while energy prices slid 5.5%. Housing and utility prices were up 1%, while healthcare rose 0.6%. So everything except energy was up, right? Food prices were at 0.8%. So food prices is up more than except housing and utilities, which wouldn't utilities include energy? I'm not sure about that. Utilities for your home, but well, my biggest utility bill is energy. Is yeah, energy. Market showed little reaction to the news, with stock futures pointing to a slightly higher open on Wall Street. The market, however, has been highly volatile, and investors deal with the highest inflation since the early 1980s. To combat inflation, the Federal Reserve has enacted a series of interest rate increases this year, totaling 3 percentage points, taking rates to their highest levels since early 2008. Right, and if you listen to the Fed, if the Fed is to be believed, he's going to raise rates again, and keep going, because they're nowhere near the 2% that he's trying to get to, or that they are. The Federal Reserve Board is 19 members, so it's not just Jerome Powell. He's the governor, or the head of the Federal Reserve, but they all vote on it. So, um, you know, the if they're to be believed, and if you listen to his speech at Jackson Hole, Wyoming, they're going to continue to raise rates aggressively until inflation comes in alignment with the 2%. So right now they're 4.9%. So there's quite a ways to go. Fed Chair Liel Brainerd, in a speech Friday morning, cautioned against pulling back prematurely, saying rates will remain higher for some time until inflation is brought under control. Yeah, exactly. Yeah, so it just looks like to me that the stock market, all assets are, this is just the beginning, in my opinion, right? I know some of the pundits on TV are saying, have we hit the bottom yet? Are we anywhere near the bottom? No way. We're just starting. We're just starting. Inflation is still nowhere near where the Fed has said they want it to be. So if they're to be believed, they're going to raise rates again, and that's going to be a shock to stocks. I don't think it's priced in like everybody's saying. Um, we still have to get third quarter earnings right to come out. We're gonna have third quarter earnings. You've got the Christmas season coming up. If those numbers are weak, stock market's gonna fall even more. So, right, and everything is down with the stock market. It's not just the stock market. Gold's down, silver's down, right? Crypto's down. Real estate is not going down as fast as everything, but real estate is on its way down as well. If you look at the writing on the wall, it is down somewhat, but real estate takes longer than most things. You can't sell real estate as easily as you can sell stock. And also, real estate will be a lot based on your local markets. There will be local markets that are going to crash more than some markets, right? Like Vegas is going to go down. Phoenix is going to. Boise are some of the places that are going to go down in real estate. But everything is going to be down right now, and inflation is not getting better. So the Fed, if they're to be believed in what they're saying, if they don't reverse course, which at this point it would be a problem with their credibility if they reverse course. So looks like there's going to be another, unless something drastically changes, looks like there's going to be at least one more rate hike this year. I would bet on two more, and probably I would suspect one in February as well. All right. My name is Ross. If you got any value out of this video, please click the like, consider subscribing. It doesn't cost you anything. It helps me out a lot though. Peace.